Good evening, everyone. So I hope you people have brought today because today's accountancy paper is very balanced paper, and I'm expecting many of you have done good job, right? So in today's session, we are going to discuss the answer key. We are going to analyze the whole question paper for Delhi region. That is the paper code is 67 oblique 1 oblique 1, right? So accountancy 67 oblique 1 oblique 1. That is the Delhi region set 1. So now this is the first question. Sara and Tara were partners in a firm. The capital as on 1st April 2023 were 6 lakh, 4 lakh. On 1st October, Tara withdraw rupees 1 lakh for personal use. Since this is a normal drawing, this drawing is not going to disturb the capital. According to the partnership deed, interest on capital was allowed 8% per annum. Right. So we need to calculate interest allowed on Tara's capital. Tara's capital is 4 lakh, right? Though she has withdrawn the drawing, she has made a draw during the year, but that is not going to affect the capital since this is a drawing in lieu of profit, not in lieu of capital. Consequently, the capital will be 4 lakh throughout the year, and interest on capital will be 8% of 4 lakh, that is going to be 32,000. So finally, the answer will be 32,000. That's why option D will be the correct answer. Now coming to next. This is a assertion based question. The assertion is each partner carrying on business for the firm is principal as well as agent. Yes, the partner is a principal as well as the agent for all the partners. And reason they have given, there exists a relationship of mutual agency. Yes, with respect to the mutual agency, every partner in itself, he is an agent of other partners. So I think both the assertions and reasons are correct. And in fact, the reason is correct explanation of assertion. That's why it need to be option A. So option A will be the correct answer. Next, question number 3. This question is having internal choice. VL Limited offered for public subscription 90,000 equity shares, 10 each at a premium of 10%. So they've given the premium 10%. The entire amount payable on application were received 1 lakh. So the company has received application for 1 lakh, and the paid up value is 10 plus 1, that is 11 lakh rupees. So you need to calculate the amount received on application. So on application, we have received the paid up value including premium, that is 11 rupees, since there is only single installment. So 1 lakh into 11, it is going to be 11 lakh. Finally, option D will be the correct answer. Now, with respect to the B part, internal choice, this question is having VX Limited issued 30,000 8% debenture of rupees 100 each at a discount of 10%, redeemable at a certain rate of premium. So in this question, we are given the discount at the time of issue as well as the premium at the time of redemption, right? So on these debentures, loss on issue of debenture debited 4 lakh 50. You know that loss on issue of debenture is a combination of both. When we pass the compound entry, it includes the discount in issue of debenture as well as the premium on redemption of debenture. So the face value of the debenture is 30,000 into 100, which is going to be 30 lakhs. So when we calculate the discount on issue, which is a 10%, so 3 lakh rupees is the amount of the discount lying in the loss on issue of debenture account. That is 4 lakh 50. So out of 4 lakh 50, 3 lakh belongs to discount and issue of debenture. Remaining 1 lakh 50 is going to be premium on redemption. That's why option B will be the correct answer. Now coming to next. Now this is the question number 4. This question is also having the internal choice. Karthik, Inder and Lalit were partners in a firm sharing profit losses in the ratio of 4:3:2. With effect from 1st April 2024, they decided to share profit ratio in the ratio of 2:3:4. So if you see that Karthik, the old share of Karthik is 4/9, though the new share is 2/9. So that means Karthik is sacrificing by 2/9. With respect to Inder is neither gaining nor sacrificing with respect to Lalit. So consequently, Lalit need to be gaining partner because the old share of Lalit was 2/9 and the new share is 4/9. Consequently, Lalit is gaining. The goodwill of the firm is 1 lakh 80. So you know where we pass the journal entry gaining to sacrificing. So Lalit is going to gain, right? So Lalit gaining share will be 2/9 into 1 lakh 80,000. So you need to calculate that will come 40,000. So the entry will be Lalit's capital account debit to Karthik account. So consequently, the answer will be option A. That is Lalit to Karthik, 40,000, 40,000. Now this question is having internal choice with respect to internal choice. Now B part. Nidhi Pranav issue were partners in a firm sharing profit losses in the ratio of 5:1. With effect from 1st April 2024, they decided to share future profits in the ratio of 4:1 and 5. On that date, there was a debit balance of 4 lakh rupees in the P&L account. So this is the 4 lakh rupees lying in the P&L account. You have to pass the necessary journal entry. You need to write off the P&L account among all partners in old PSR since it is accumulated losses. Consequently, partners' capital account are going to be debited in their old PSR with respect to all partners, and P&L account is going to be credited. Finally, option C will be the correct answer because it is quite easy. Option A can't be the answer. Option D can't be the answer. It is a P&L account debit balance. If you write it off, it is going to be credited. That's why it's quite easy to predict. Even no need to solve. Option C will be the correct answer. Now, question number 5. With respect to question number 5, Moksh and Pran are partners sharing profit loss in the ratio of 1 is to 2. The capitals are 5 lakh, 3 lakh respectively. They admitted Tushar as a new partner for 1 4 share in the future profit. Tushar brought 4 lakh rupees as his capital, the goodwill of the firm on Tushar's admission. This is a case of hidden goodwill. So first of all, you people need to calculate total capital of the firm on the basis of Tushar, that is 4 lakh, multiply by reciprocal of his share, which will come 16 lakh. Right? Now, this is the total goodwill of total capital of the firm, including goodwill. Then you will add the capital of Moksh, 5 lakh, Pran, 3 lakh, and Tushar also 4 lakh. So it will come 12 lakh. This is the total capital of the firm excluding goodwill. So 16 lakh minus 12 lakh, 4 lakh represent the goodwill of the firm. That will come part B. So part B will be the correct answer with respect to question number 5. Now question number 6. Money received in advance from shareholder before it is actually called up by the directors. You know that it is to be credited to calls in advance account. Quite easy. It is a bumper offer, bonus offer. Very good day for you accounting people, commerce students, because the paper is very balanced. I'm very happy, students. I know you people are going to rock, right? So please be ready to distribute the sweets whenever the board results will come. Answer is quite easy. This is option A, credit to calls in advance account. Now, next question, question number 7. Again, quite easy theoretical question. So, theory is student friendly in this paper, whole paper. So, debenture in respect of which of all details, including name, address, particulars of holders of the debenture holders are entered in the registered kept by the company. Quite easy. Hint मिला हुआ है. इसमें कुछ ढूंढना ही नहीं है. Very easy. Answer is registered debentures. Now this question is having internal choice, part B. So the portion of the capital, called up capital, which has been actually received, again quite easy, right? So the answer is paid up capital. Now, question number 8. Misha, Sarita, Isha were partners in a firm sharing profit losses in the ratio of 3 to 1. On 1st April, they decided that they will share profit equally. So technically, you need to calculate the gaining sacrificing share. So Misha share is 3 by 6, Sarita 2 by 6, and Isha is 1 by 6. With respect to the new firm, Misha 1/3, Sarita 1/3, and Isha 1/3. So technically, Sarita is a partner who is neither gaining nor sacrificing. And with respect to Misha, if you calculate this, right? So 3 by 6 minus 2 by 6, then you take the LCM. So it will come 1 by 6 sacrificing. So Misha is sacrificing and Isha is gaining by 1 by 6, right? So you need to find out the answer accordingly. So option A will be the correct answer with respect to option question A. Now this question is having internal choice. Now part B. Sia, Tisha and Aryan were partners sharing profit losses in the ratio of 4:7:1. The firm closes on 31st March every year. Tisha died on 1st July 2024. Sarita and Arya will require Tisha's share in which of the following ratio? You know that Tisha has been dead. So Tisha's share is 7. Question is silent. So by default, the remaining partners will share their profit in the new ratio. That will be same as their old ratio with respect to the continuing partners. So Sia and Arya both are continuing. In that scenario, their old ratio with respect to Sia and Aryan is 4:1. That will be their new PSR, as well as they will be gaining in this ratio. So 4:1 will be the answer. That's why option B will be the correct answer. Now, question number 9. Anuj Karthik were partners in a firm sharing profit losses in the ratio of 5:4. Anuj withdraw 20,000 the beginning of every alternate month. This is a first question out of what we have discussed. In this, you people need to pay attention, application based, right? So every alternate month, nothing but bi-monthly, right? So if he is withdrawn on, he is withdrawing from 1st April, right? So that you people need to calculate. So that's why he has withdrawn on 1st April, right? Then he has withdrawn 1st of June, then 1st of August, 1st of October, 1st of December, then 1st of February, right? So first drawing he has withdrawn on 1st of April, last drawing he has withdrawn on 1st of February. Accordingly, you people need to calculate average time period, which will come 7 months. That is 14 plus 2 divided by 2. right? Which will come 7 months. Accordingly, we'll be calculate interest. So 20,000 into 6, because 6 times he has withdrawn throughout the year on the basis of alternate months. So 1 lakh 20. The rate of interest is 6%, and we will calculate the interest for 7 months, right? So accordingly, we will solve this. This will come 100 rupees. 100 multiplied by 6 multiplied by 7. Consequently, it will come 4,200. So option C will be the correct answer. Now, question number 10. Question number 10. This question is having internal choice. Vishal, Vishesh, Manik, Amit are partners in a firm sharing profit losses in a ratio of 5 is to 4 is to 1. Amit retired on 31st of March 2024. Vishesh and Manik acquired Amit's share in the ratio of 2 is to 3. So you people need to solve this question. Here, the partner who is going to be retired, Amit's share is 1 by 10. That is to be acquired by the other partners in the ratio of 2 is to 3. So 2 by 5 of Amit's share, that is 2 by 5 or 1 by 5, 1 by 10. So that will come 2 by 50. So 2 by 50 is a gaining share of Vishesh, and 1 by 5, uh, 3 by 5, not 1 by 5, 3 by 5 of 1 by 10, that will come 3 by 50. That is a gaining share of another partner, that is money. And this share is to be added in their old share, that is 5 by 10 plus 2 by 50. You know that since it is a case of retirement, you don't need to calculate the new share of both the partners. If you calculate the share of particular partner, automatically you will get the share of remaining partner. So you will take the LCM here. So it will come 27 by 50. That is a Vishesh new share. So finally, the Manik share will come 27. Sorry, 50 minus 27, that is 23. So that's why the correct answer will be option D. Now, part B. Part B of question number 10, that will be Varsha, Arya, and Nimit are partners sharing profit losses in the ratio of 2 is to 2 is to 1. Varsha retired, surrendered one third of her share in favor of Aryan and remaining share in favor of Nimit. So that means one third of her share in favor of Aryan, two-third of her share in favor of Namit, right? So you need to calculate the new PSR. So Varsha's share is how much? Varsha is having 2 by 5. So Varsha's one third share will be 2 by 50. That is Aryan's gaining share. With respect to two-third of Varsha's shares, that will come uh, 4 by 50, right? So 2 by 50, Arya is gaining. 4 by 15, Namit is gaining. So Arya's new share will be 2 by 5 plus 2 by 50. So if you take the LCM, it will come 8 by 50. So technically, Namit's share will come 7 by 50. So that's why the answer will be option B. Now, next question. Question number 11, again, quite easy question. I've already told you theory is student friendly, 100% student friendly. Now the paper setter is what they are making the promise being the best friend, right? So they're celebrating Friendship Day in today's session. I'm just telling you, it's the easy paper in the last 1 decade I've never seen. So when the partners called capitals are fixed, the drawings made by the partner are recorded as, right? So partners capitals are fixed. So partners capitals are fixed and drawing, there is no specification. It is a normal drawing. It is a drawing in lieu of profit. It is to be debited to current account of the partner. Consequently, you need to find out the answer. The answer will be option C. Now, next question. Question number 12, 4,000 shares of 10 each were forfeited for the non-payment of second and final call, that is 2 rupees. So that means company has received 8 rupees and company has not received 2 rupees. There is no premium. Now the minimum amount the company must collect at the time of reissue. So company is going to give you maximum discount of 8 that company has already received and credited to forfeiture account. So the company is going to reissue these shares at rupees 2 that company is supposed to receive if the company is giving maximum discount. So 2 rupees multiplied by 4,000. So that means it will come 8,000. Option A will be the correct answer. Now, question number 13. Question number 13. On 1st April 2023, VB Limited issued 20,000 13% debenture of 100 each at a discount of 10%, redeemable at a premium of 5% after 4 years, right? You need to calculate the interest on debentures since companies issued the debentures on 1st of April. It is a financial year which is going to be ended on 31st of March. You will calculate the interest for whole year, right? So interest is to be calculated on the face value. So that is 20,000 multiplied by 100. It will come 20 lakhs. 13% of 20 lakhs that you people need to calculate, which will come 2 lakh 60,000. That's why option B will be the correct answer. That is 2 lakh 60,000. Next question. Question number 14. Arushi, Vivan, Mitali were partners in a firm. On 31st March 2024, the firm was dissolved. On that, the firm has a debtors of 60,000, and the provision also doubtful debts for 3,000, right? You know that debtors transfer debited to realization account and provision credited to realization account, right? So debtors of 8,000 become bad debts. So the good debtors are 52,000, supposed to be good debtors are 52,000, and company has received full amount. Very fortunate situation for the company. So that means the whole amount company has received. There is no use of provision in this case. Provision just need to be written off, right? So in this case, the company is going to receive 52,000. Accordingly, option C will be the correct answer. Next, question number 15. Now, with respect to question number 15, Ashmeet, Veena, Rohan were partners in a firm sharing profit losses in the ratio of 3 to 1. Veena retired on 31st of March 2024. The capital of Ashmeet, Veena, Rohan showed a credit balance of 2 lakh 1 lakh 80, 1 lakh 20 after making all the adjustment related to revaluation goodwill reserve. So after making all adjustments, Veena was paid in cash brought in by Amit and Rohan in such a way that the capital will be in the new PSR, right? So you need to calculate the new capital of Ashmeet and Rohan. So first of all, you people need to understand Ashmeet present capital is 2 lakh. Rohan present capital is 1 lakh 20, and the combined amount they are supposed to bring to settle the Venus account, that is the amount of Venus capital, that is 1 lakh 80. So when you club all these, it will come 5 lakh, and you will divide the 5 lakh in new PSR. There is no ratio given. So by default, old PSR with respect to Ashmit and Rohan, that will be assumed their new PSR, that is 3 to 1. So 3 by 4 Ashmit share, 1 by 4 is Rohan shares with respect to the total capital in the new firm. So Ashmit share will come 3 lakh 75 and Rohan share will come 1 lakh 25. Accordingly, option A will be the correct answer. Now, next question. Question number 16, Neeta, Vidur, Meetam are partners sharing profit loss in the ratio of 3 to 341. On 1st April 2024, they decided to admit Samir as a new partner. New PSR is given. So they have given the machinery 6 lakh rupees, which has been overvalued by 20%. That means 6 lakh represent 120%. So you need to calculate the value of the machine that is to be shown in the balance sheet of the new firm after some is admission, right? So you need to reduce the value. So 6 lakh represent 120%. Accordingly, you need to calculate 100%, which will come 5 lakh. So option D will be the correct answer. If you calculate, the shortcut is 6 lakhs upon 1 lakh 20 upon into 1 lakh, sorry, 6 lakhs into 100 upon 120. So it will come 5 lakh. Option D will be the correct answer. Zaina, Yash, Kiran were partners in a firm sharing profit losses in the ratio of 2 to 1. Zaina died on 1st of July. On 1st of July means the Zaina is going to die after 3 months, right? Accordingly, you need to calculate. So, as per the partnership deed, Janus share of the profit till the date of death was to be calculated on the basis of sales. It is not a profitability method, it is a turnover method. So turnover method remains easy as compared to profitability method. Sales of the last year was 4 lakh rupees, and the profit of the last year that is given 1 lakh rupees, right? And the sales in the current year for the 3 months, that is 1 lakh 50. Zena's share is 2 by 5 that we need to calculate. So 1 lakh 50, 25% of 1 lakh 50, that will come 37,500 into 2 by 5. Accordingly, you people need to solve this. So 2 by 5 you need to calculate. So divide by 5, multiply by 2. So it will come 15,000. Since the ratio of the Yash and Kiran remains same in the new firm, that's why the ratio is not going to be changed. So you have to open the P&L suspense account because we have to pass the necessary journal entry. Single entry they have asked. This is the working that we need to show. So entry will be profit and loss suspense account debit to Zena capital account. I am quite sure you people have prepared the format properly, right? Even you have written the narration as well as date, that is on 1st of July. So you need to write the date also, because if you have not written, so half marks may be deducted. That is on July 1st. So accordingly, this will come 15,000, 15,000. And narration is being Janus profit transferred to her capital account through P&L suspense account. Now, next question. Now, question number 18 is having two choice. I'm going to discuss part A first. The firm of Amish Nitish Misha, who have been sharing profit in the ratio of 2 to 1, have existed for some years. Misha wanted that she should get equal share in the profit with Amish and Nitish, and she further wished that the change in PSR that should come into effect retrospectively from the last 3 years, right? The profit had been distributed in the ratio of 2 to 1, but now they are deciding the profit need to be distributed equally. She has wished this, and the other partners have accepted. So you need to do retrospective calculation. So with respect to retrospective calculation, first of all, you need to calculate the profit which has been credited, distributed, already distributed in the ratio of 2 to 1 with respect to the partners Amish, Nitish, and Nisha. So the profit that has been credited in the ratio of 2 to 1, the total profit you need to calculate here, you need to add here, which is going to divide it in the ratio of 2 to 1, right? So the profit with that will come. So the total profit of the 3 years is again we need to cross check. There is no loss. The total profit is 4 lakh 50. So the profit is to be distributed. It has been distributed in the ratio of 4 is 2 is to 2 is to 1. Accordingly, you will divide by 5. That will come 90,000. So 1 lakh 80, 1 lakh 80, and 90,000. And this amount had been debited. Now it is to be debited since it has been credited in the ratio of 2 to 1, right? Now this profit should be distributed equally, that is in the ratio 1 is to 1 is to 1, that she has given her wish and other partners have accepted. So it will come 1 lakh 50, 1 lakh 50, 1 lakh 50. So Amish will compensate 30,000 because it is coming 30,000 debit. So Amish capital account will be debited by 30,000. Nitish capital will also be debited by 30,000, and Misha's capital is going to be credited by 60,000. So the entry will be Amish capital account debit 30,000, then Nitish capital account debit 30,000 to Misha's capital account 60,000. So this will be the entry, this will be the working that we need to show and we need to pass. Now, next part of this question, that is part B, which is given in the internal choice. Now, with respect to internal choice, in the internal choice, we are given Vidhi, Manas, and Ansh. They were sharing profit losses in the ratio of 2 is to 3 is to 5. Ansh was given a guarantee that his share of profit, minimum profit, that is, should not be less than 1 lakh 20,000. Though the profit was 2 lakh, we need to distribute the profit in the ratio of 2 is to 3 is to 5, 2 by 5, sorry, 2 by 10. Then 2 lakh, 3 by 10, then 2 lakh, 5 by 10. This is Vidhi. Now Manas and Ansh. So Vidhi's share will come 2 lakh into 2 by 10, that will come 40,000. Manas share will come, that is 60,000, and Ansh shares will come 1 lakh. But the firm has given the guarantee of 1 lakh 20 minimum. So 20,000 is the difference that is to be compensated by Vidhi and Manas equally. That is given in the question. So 20,000 is the deficiency to be borne by Vidhi and Manas equally. So 40,000 minus 10,000. So Vidhi's shares, now final share will come 30,000. With respect to Manas, it will come 10,000. So Manas share will come 30,000. So 50,000. So here you have to pass the necessary journal entries, not entry. Many times we have discussed in the class. Here we need to pass two journal entry. Firstly, the profit will simply be distributed. That is 1 lakh in the ratio of 2 is to 3 is to 5. So you will pass the journal entry P&L appropriation account debit since this is a profit. So P&L appropriation account debit. I am just writing here P&L appropriation account debit. That is 2 lakh to Vidhi, to Manas, and to Ansh. That is 40,000, 60,000, and 1 lakh. This is a simple distribution of the profit in the PSR. Now we have to pass the adjustment entry to compensate the deficiency. So Manas and Anesh, sorry, Vidhi and Manas, they are going to compensate. So now we will pass one more entry with this capital debit, that is 10,000. So with this capital debit, Manas capital debit, that is 10,000, to Anish capital account, that is 20,000. So there will be two journal entries. So in case any child who have passed the compound entry, so sorry to say, the child is going to lose the marks because here it is clearly given. Many times we have told in the class we have to pass two journal entries. Adjustment entry will be done separately. Now Coming to next question, that is question number 19. Now, with respect to question number 19, Delight Limited purchased assets of 4 lakh rupees to cover the liabilities of 70,000 of the Marvel Limited for the purchase consideration of 3 lakh 60. Delight Limited paid purchase consideration issuing 11% debenture of 100 each at a premium of 20%. We have to pass the journal entry in the books of Delight Limited. So we have to make a proper format of journal in the books of, we have to write here in the books of Delight Limited, right? In the books of Delight Limited. So this is the format of the journal. You know that what is the format? So date, particulars, LF, debit, credit, right? I'm not going to waste your time in this case. You know the format. I'm just passing the journal entry. So in the books of Delight Limited, we are passing the journal entry sundry assets account debit. So sundry assets are going to be debited by 4 lakh. Then two sundry liabilities. Sundry liabilities are 70,000. Purchase consideration is given to us. So to Marvel Limited. Marvel Limited is to be credited by the PC. That is nothing but purchase consideration, which will come 3 lakh 60. So in this case, 3 lakh 60 plus 70, 4 lakh 30. So 30,000 will be the balance in the debit side that will represent the goodwill account as a balancing figure. So this is a goodwill account debited by 30,000. You will write here the narration being the assets and liabilities taken over from Marvel Limited. And also we have paid the 30,000 for goodwill. Now with respect to passing the journal entry for issue of debentures. So you need to calculate the number of debentures in the working, otherwise marks may be deducted. So the purchase consideration is 3 lakh 60. Accordingly, you will divide by the number paid up value of the debenture, which is 1 lakh 20. So 3 lakh 60 divided by 1 lakh 20, it will come 3,100, 3,000. So number of debentures will come 3,000. Accordingly, you have to pass the journal entry. Now, Marvel Limited debit. So Marvel Limited debited 3 lakh 60,000 to now 11% debenture account, 3 lakh. How we have calculated 3,000 multiplied by the face value of the debenture to security premium account. To security premium account, that will come 3,000 into 20. So that is 60,000. So this is the case one with respect to Delight Limited. Now I'm going to discuss the part B of this case, right? Which is given internal choice. You are required to attempt either part A or part B, not both. Now, so in this case, we are going to solve this question once again with respect to next part, Prime Limited, right? So in the books of Prime Limited, we are going to discuss the next part. Now, again, you need to prepare the format of the journal. You know how to prepare. I'm not going to waste your time. So in the books of Prime Limited, first of all, sundry assets debited 6 lakh because they have purchased assets at 6 lakh. Two sundry liabilities. Liabilities are 1 lakh and the purchase consideration is 3 lakh 60 to Rabi Limited. 3 lakh 60. So you can see here the balancing figure is coming in the credit side, which will represent capital reserve to capital reserve. That is 1 lakh 40. Thereafter, you have to pass the journal entry. So the purchase consideration is 3 lakh 60 and the company has issued these debentures at 10% discount. The face value is 100. So paid up value is 90. Accordingly, 4,000 debentures will come. Now you need to pass the journal entry with respect to issue of debentures other than cash. Rabi Limited debit 3 lakh 60. Then discount on issue of debenture, right? The discount on issue of debenture debit, which will come 40,000. How 40,000? 4,000 multiplied by 10. Now, two, the percentage is given 10% debenture. This is the rate of interest to 10% debenture account. That is 4 lakh. You need to write the narration, proper format of the journal. Then this is the solution of question number 19. Now question number 20. So the capital of Rajat and Karan is 15 lakh rupees. Market rate of return interest is 12%. So you need to calculate the goodwill of the firm on the basis of super profit method. So first of all, you need to calculate the normal profit. The normal profit is to be calculated by the average capital employed into rate of normal rate of return. Here we are given the capital employed. We'll assume it is equal to as average capital employed. multiply by the normal rate of return, which will be assumed as equal to rate of interest lying in the capital of the partners. So the normal profit will come 1,80,000. Now you need to calculate the average actual profit. Average actual profit of the last 3 years, we are given the profit of the last 3 years, 2,40,000, 2,80,000, 3,20,000. When you calculate here, 240 plus 280 plus 320, that is 8,40,000 divided by 3. So average profit is coming 2,80,000. But you need to calculate average actual notional profit. So you need to deduct the maintainable cost, and here the partner's salary need to be deducted, which are 20,000 and 30,000. So 2,80,000 minus 50,000. So actual average profit will be considered for calculation of goodwill, that is 2,30,000. So 2,30,000 is the average actual profit. So the super profit, which is nothing but average actual profit 2,30,000 minus normal profit, that is 1,80,000. So this is coming 50,000. Goodwill of the firm is 2 years purchase of super profit. So 2 into 50,000, that will come 1 lakh. So accordingly, this is the solution of this question. That is question number 20. So this is the case of issue of debentures in two cases. One is Cure Limited, one is Narrow Limited, right? So Cure Limited issued 80,000 9% debenture of 100 each at par, redeemable at premium of 10%. So here we have to pass the two journal entries. First of all, bank account debit to 9% debenture application and allotment account. So since company is issuing these debentures at par, so 80,000 number of debentures are there, multiply by 100. So 80,000 multiplied by 100, right? So it will come 80 lakhs. Now these debentures, they are going to be redeemed at a premium of 9%. So now next entry will be 9% debenture application and allotment account debit, loss on issue of debenture account debit to 9% debenture account to premium on redemption of debenture account. So face value is 80 lakh. Now debentures application allotment is also 80 lakhs. There is no premium, no discount at the time of issue, but there is a premium at the time of redemption, that is 10%. So 8 lakh will be debited by the loss and 8 lakh will be credited by the premium on redemption of debenture, right? So that will be the journal entry in first case. Now with respect to case 2. So with respect to case 2, so we are going to pass the journal entry Narrow Limited in the books of Narrow Limited 50,000. Now we are going to pass the journal entry with respect to 50,000 debentures, 10% debentures of 100 each at a premium of 5%, redeemable at a premium of 10%. So this is a case of issued at premium. So the company is going to receive 105 multiplied by 50. 105 multiplied by 50,000, which will come 52 lakhs 50,000. So the first entry will be bank account debit 52 lakh 50,000, because 50,000 number of debentures multiplied by 100, 50 lakhs, 5% is 2 lakh 50. So bank account will be debited by 52 lakh 50,000 to debentures application and allotment account 52 lakh 50,000. Now with respect to the next entry, the amount will be due, will be transferred to debenture account. So debenture application and allotment account debit 5250, loss on issue of debenture account debit, that is 10% of the face value, because redemption will be done at a premium of 10%, which will come 5 lakh, 10% of 50 lakh, which will come 5 lakh. To 10% debenture account. In this account, we will credit the face value. The face value of the debenture is 100 rupees multiplied by 50,000, which will come 50 lakhs. To security premium account, which will come 2 lakh 50,000. To premium on redemption of debenture, that will come 5 lakh. So this will be the journal entry. You have to prepare proper format of the journal, writing the narration. There is no date is mentioned. So date column may be left, right, without writing anything. So particulars, you need to write the journal entries, you need to write the narration, and accordingly you need to pass the journal entry. Next question, we are coming, question number 22. Now with respect to question number 22, so this is question number 22. Rajat, Bharat, Vedika, they were partners. In this question, but Vedika died. We need to prepare Vedika's capital account. Only Vedika's capital account we need to prepare. No journal entry we require to pass, right? So we need to calculate the amount which that is payable to executor of Vedika. So debit, credit, Vedika's capital account, particulars, amount, particulars, amount. So first of all, buy balance BD. So balance BD that is given with respect to Vedika 90,000, right? Then we have transfer calculated the interest till the date of death. So Vedika's capital is 90,000 and she has been dead on 31st of July. Interest is 8% and 4 months interest we required to calculate, which will come 2,400. Now, by general reserve, we are given the general reserve, which is 50,000. Vedika's share is 1 by 5. So 1 by 5 of 50,000, which will come 10,000. Then, by we need to calculate, we are given Vedika's share of profit till the date of that is 3,000 in the current year. So, by P&L suspense account, because the ratio is not changing, so entry will be done through P&L suspense account, that is 3,000. Then we have to calculate the goodwill. So goodwill, accordingly, we need to calculate average profit of the last 3 years, that is 40,000. Goodwill is to be calculated 2 years purchase of average profit of last 3 years. 40,000 multiplied by 2, that will come 80,000, right? And Vedika's share is 1 by 5. So accordingly, you need to calculate. So it will come 16,000. So Vedika's shares will come 60,000 and this 60,000 will be compensated by other partners. So you need to see here. So in this case, the other partners, Raja and Bharat, their old PSR is 2:2. So there is no case in which they are acquiring how much share of Vedika, that is no information is given. So they will be gaining in the same ratio, that is 2:2, nothing but 1:1. So by Raja's capital by Bharat's capital, that will come 8,000, 8,000. So the total amount that we supposed to pay to Vedika's executor, sorry, one more item is given, Vedika's drawing, that is 12,000. So to drawing account, there is no interest on drawing, so we should not bother about that. Drawing is given, so capital is going to be reduced. Now the balance amount will be transferred to Vedika's executor's account. So by adding all the credit side items, the total is coming 1,21,400. 1,21,400 minus 12,000. This will come 1,09,400. So 1,09,400 is going to be transferred to Vedika's executor's account. Now, question number 23. This is a case study based question, quite easy question. Again, lollipop question. It's a lollipop, right? So, quite easy. You need to calculate in the first case call in arrears. So, call in arrears, it is to be calculated 2,000 shares multiplied by 2. Since the arrears lying on 2,000 shares and they have not paid the final call money of 2,000 into 2, that will come 4,000. That's why option A will be the correct answer. Now, with respect to part B, the number of shares PL Limited after forfeiture. The company has since application were received only for 82,000 and after forfeiture since 2,000 shares were forfeited due to non-payment of final call money by the Atishe. So 80,000 will be the number of shares after forfeiture. Accordingly, option D will be the correct answer. Now, with respect to in the notes to account, the amount disclosed under the share forfeiture account. The amount disclosed under the share forfeiture account. So that will come 16,000, right? So now the question is how this will come. So under notes to account, share forfeiture account, they have not been reissued. The company has forfeited 2,000 multiplied by 8. So 8 multiplied by 2,000, that will come 16,000, 16,000 lying in the forfeiture account. So that's why it will be option A. Now, next question, part 4. In the notes to accounts, the amount disclosed and the issued capital. Since company has invited 90,000 shares, right? Applications for 90,000. So issued capital with respect to the face value will become 9 lakh. Accordingly, the option B will be the correct answer. Now, balance in the forfeiture account will be shown in the notes to accounts in the balance sheet of PL Limited under. You know that share forfeiture account will be shown under subscribed capital. That's why it will be option C will be the correct answer. Now, the amount of share capital disclosed in the balance sheet. So you need to calculate the amount of share capital that will come 8,16,000. Option B will be the correct answer because 80,000 shares, there is no problem with respect to 80,000. 80,000 to 10 whole money has been received, that is 8 lakh rupees. And one more thing, that is a forfeiture account credit balance 16,000 with respect to amount forfeited against Atish's share. So this is 8 lakh 16,000. So this is coming 8 lakh 16,000, right? When I read this question, I was happy. Even my son is also laughing because occasionally the name of my son is Atishi, right? So we were laughing. Atishi, your name is now going to be viral in today's paper. So this is only for fun. Now coming to next. So now question number 24 with respect to passing the journal entry in case of dissolution, right? You know, dissolution of the partnership firm. The first case, creditors of 46,000 accepted 9,000 cash, furniture 32,000 for settlement. When the assets and liabilities are going to be settled, will be no journal entry. But since you are making a payment of 9,000, the first entry will be realization account debit to cash account. Only this entry will be done in case of, in first case, 9,000, 9,000. This is first case. Now part 2. The firm has a stock of 20,000. Ajit took over 40% of the stock at a discount of 10%. 40% of the stock means 8,000 and 10% discount is 800. So firm will debit Ajit capital, that is 8,000 minus 800, that is 7,200, as well as the firm has sold the remaining stock for rupees 18,000. 18,000. So bank account or cash account. If you're writing cash account, so in every entry you will pass by cash account whenever you are getting cash or paying cash. So 18,000 to realization account. This is 25,200, right? Now with respect to next entry, entry number 3. In case of entry number 3, that is what. So, in entry number 3, Viva was appointed. The firm is making a payment of 16,000 remuneration to Viva. So, and she has decided to bear the realization expense and she has also paid the realization expense. So, when the partner is bearing and paying, there will be no journal entry, but the firm is paying 16,000 to the partner. So, the burden of the firm is going to be 16,000. So, realization account debited to Viva's capital account. 16,000, 16,000. This is the case entry number 3, right? Now fourth, Ajit loan was settled. The loan was 45,000, settled 42,000. So with respect to fourth part, Ajit loan is prepared separately as per the settlement of the account. Ajit loan account will be debited by 45,000 to cash account, 42,000 to realization account, that is a gain because you settled the loan by the lesser amount, 3,000. Now, the last part of this question, the firm is having a debit balance of 20,000. So, you are required to pass journal entry for that. So, Vibha, capital debit, it is to be written off among the partners. There is no relation with respect to realization account. No ratio is given. So, old PSR will be assumed equal. Ajit, capital account, 10,000 to P&L account, 10,000, 20,000. So this is the entry number 6. Here you don't need to calculate the profit or loss on realization because all informations are not given. You are given the information in the extracted manner. So you don't need to pass the entry for realization, profit or loss, right? Now, next question, that is question number 25. So this question is having internal choice, right? So question number 25, part A, we are going to discuss first that. So the first entry in we are required to pass journal entry in this case in the books of Ultima Limited. Bank account will be debited by 16 lakh 80,000 to share application and allotment account. I'm writing the short form. App means application. You have to write whole to share application and allotment account. 16 lakh 80,000, 16 lakh 80,000. Right? How you have calculated this amount? 2 lakh 40. We have received the application. Multiply by the paid up value, that is 7 rupees. Now, next part we are going to discuss. I have to write many journal entries. So when I write the old one. I'm going to write the new one. I will remove the old one, right? So now here application money will be due. Application and allotment account will be debited. 16 lakh 80,000 to share capital account. This is a case of pro rata, but in this case, even the question is having pro rata, but it is quite easy because the excess application money is going to be refunded, returned. It is not going to be adjusted in first and final call. So this is a key point of this question. If students have not read the question properly, they may commit this error. They may credit the amount of excess money in the pro rata category with respect to first and final call. In this question, the company has received the application for 2 lakh 40, 30,000 were completely rejected. So the pro rata category is 2 lakh 10,000 versus 2 lakh, right? So 10,000 against the 10,000 shares multiplied by 7, nothing but 70,000 rupees. We are having excess application money that's supposed to be refunded because the question is specifically given the excess money is to be refunded. You can't adjust by yourself, right? So accordingly to share capital, capital will be having the face value. The face value of the capital is 6 rupees multiplied by 2 lakh. 2 lakh into 6, that will come 12 lakh. To security premium account, premium is 1 rupee per share. So 2 lakh multiplied by 1, that will come 2 lakh. To bank account, in bank account it will come 2 lakh 80,000. So how we have calculated, because 30,000 multiplied by 7 completely rejected, fully rejected, we have to refund without any problem, without any question. Now with respect to pro rata also we have to refund because the question is specifically given their excess money is to be refunded, right? So pro rata होने के बाद भी easy हो गया. So that's why this is a key area, and I hope you people have done correctly. So to bank account. Now we need to pass the journal entry for first call and final, right? So this two entry for application allotment. Now first and final call. Share first and final call debit. Share first and final call debit 14. To share capital account. To security premium account. So capital, in the capital, with respect to the capital, capital is 4 rupees and premium is 3 rupees. So 4 into the face value or number of shares and 3 into the number of shares. So to share capital 8 lakh, to security premium 6 lakh. Now we have the forfeiture, we have the call scenarios. With respect to the call scenarios, since there is no excess money completely refunded. So there is no problem of excess money, 100% of the money not received, whatever company has called up. So with respect to 4,000 shares, Manvi, who are allotted 4,000 shares, failed to pay the first and final call money. So we don't need to calculate her applied shares. Why we don't need to calculate? Because there is no excess money that has been adjusted in first and final call. So quite easy. Forfeiture होने के बाद भी easy हो गया. तो double bonus offer, right? So now we will be passing the journal entry with respect to amount received, bank account debited, calls in arrears debited, representing Manvi's shares. That is 4,000 multiplied by 7. So 4,000 multiplied by 7, that will come 28,000 to share first and final call. That is 14 lakh. So out of 14 lakh, 28,000 is what arrears. So 13 lakh 72,000 is the amount received on first and final call. Now I'm going to pass the journal entry for forfeiture. With respect to forfeiture, we are going to forfeit the shares, right? So when we are going to pass the journal entry forfeiture, with respect to forfeiture, share capital account will be debited with the fully called up because company is forfeiting after first and final call 4,000 to 10, 40,000. Security premium debited by the amount of premium not received, that is lying on first and final call. There is no problem of pro rata, simple calculation. 4,000 into 3, that will come 3 rupees is the premium lying on the first and final call, 12,000. To share forfeiture account, that is 24,000. To call scenarios, right? So we have the call scenarios. We have calculated call scenarios. So call scenario, she has not paid, right? 7 rupees. How 7 rupees? because 14 rupees minus 7, that is 7 rupees on first and final call, and 4,000 into 7, that we have already calculated 28,000. So this is a forfeiture account that company has forfeited. Company has received nothing but the face value of 6 rupees on application allotment. The company has received on 4,000 because already company has refunded the excess application money on excess shares, right? So two share forfeiture account 24,000. Now we are going to reissue these shares. So at the time of reissue, we are reissuing these shares at rupees 4 per share, right? And all the forfeited shares are going to be reissued. So bank account debited 4,000 into 4, that will come 16,000. So the company has given the discount of 6 rupees per share as a fully called up, right? So share forfeiture account will be debited by 24,000, right? To share capital account. To share capital account 40,000. So students, in this case, since all the forfeited shares have been reissued and they have been reissued at maximum discount because the amount forfeited is 24,000 and company has given the discount at 24,000. So there will be no capital reserve. So here you can write capital reserve will be 0 and there will be no journal entry with respect to capital reserve. Now we are going to solve part B of this question, right? So with respect to part B, students, in the first case, right? So in the first case, there is an error as per my perception, and I have also taken the feedback of many faculties, renowned authors of the books. So here it is written at rupees 80 per share. As per my perception, it need to be as rupees 80 per share for rupees 90 per share, right? So this need to be corrected, but this can also be predicted because the called up is 80 rupees. Second call, face value of the second call is 20 rupees, so we can assume accordingly. But error is error. So as per my perception, this is an error in the question paper, right? So now coming to this part, part B. So Messil Limited forfeited 3,000 shares of 100 each at 20% premium on non-payment of allotment money of 30 per share and first and final call money of rupees 40 per share. So we are going to classify application, allotment, first call, final call. So the face value is 100 rupees, premium is 20 rupees, allotment is 30 rupees, first and final call 40 including premium, that means 30 plus 10, and the final call is 30 including premium 10, so that is 20 plus 10. So this is 40, this is 30. Allotment is 30 without premium and application will come 20 rupees as a balancing fee. So that bifurcation we need to do. So we are going to pass the journal entry with respect to forfeiture. The second and final call, including premium, was not called up. So called up is still first call. So we need to write off accordingly. We need to forfeit accordingly. Share capital account will be debited. So how many shares forfeited? 3,000 into 3,000 into 80. The called up is the face value called up is 80 rupees. So that will come 24, 2,40,000. 3,000 into 80, nothing but 30,000 into 8, 2,40,000. Then we have to write off security premium also. The security premium that company has not received on first and final call because the particular shareholder did not pay the first and call money. So security premium will be debited, that is 10 rupees on first and final call. 3,000 into 10, that is 30,000. To share forfeiture account, the amount company has forfeited, received and forfeited nothing but 20 rupees. So 3,000 into 20, that is on application, which will come 60,000. Two call scenarios. Two call scenarios. Call scenarios represent the amount of allotment, 30 rupees, the amount of first and final, first call 40, including premium, 30 plus 40, 70. So 3,000 multiplied by 70, which will come 2,10,000. So this is the entry for forfeiture, right? Now we need to pass the general entry for reissue of these shares, right? With respect to reissue, I've already told you there is an error as per my perception, and I've confirmed the same from renowned authors also, right? So that's why I'm discussing the same. As per my perception, it need to be as, right? Not at. This is as, right? तो अगर एरर को रेक्टिफाई भी करेंगे तो यही परसेप्शन निकलेगा और उसके बेस पे ही मार्किंग स्कीम बनेगी. So this is I have ensured from other sources also, right? On the same parameter, I'm discussing the same, right? So out of these 2,000 shares were reissued as or at, it should be as, because at and for both represent action and they represent the issue price at the time of forfeiture, at the time of reissue, right? So bank account will be debited by 90 rupees. multiply by 2000, because we are not reissuing all the shares, only 2000. So this will come 1,80,000. To share capital account, 80 rupees is called up. To security premium account, so 1,60,000, 20,000. So you can see here we have forfeited 60,000 on 3,000 shares, but we have reissued only 2,000 shares. So this 60,000 lying on 3,000, proportionately we have to calculate the same for 2,000 shares, that will come 40,000. So forfeiture credit amount is 40,000. Out of that, we have not given any discount because these shares have been reissued at premium. So the whole forfeiture will be transferred to capital reserve. So share forfeiture account will be debited to capital reserve. 40,000, 40,000. This is the case one with respect to Messel Limited, right? Now we are going to solve the next case that is related to Avian Limited. Now, with respect to Avian Limited, this is a quite easy case. The company has forfeited 10,000 shares of 10 each. Final call 4 was not received. First call was not received. Second call was not called. So out of 10, second call has not been called up. First call is 4, that is 4 rupees not received. And remaining, that is 10 minus 5 rupees. Application the company has received, right? Application and allotment. So first of all, you have to forfeit the shares. So share capital account will be debited, right, by 9 rupees because final call not yet made. So 10,000 into 9, which will come 90,000. There is no premium in this case, quite easy. To share forfeiture account, that is amount forfeited of the face value, that is 5 rupees including application and allotment. 10,000 into 5, 50,000. To calls in arrears or share first call, if you don't want to open the calls in arrears account, but better to open calls in arrears account. So that is 4 rupees amount of first call, that is 40,000. So this is the entry for forfeiture. Now company has reissued these shares. Out of these 4,000 shares, company has reissued uh, as fully paid up. That means the whole called up, fully called up 9 rupees. So bank account will be debited by 9, multiply by number of reissued shares, 36,000. Then company has, since it is a fully called up, so company has given a discount. So share forfeiture account will be debited by 1 rupee per share. That will come 4,000. To share capital, that is fully called up, nothing but 4,000 into 10, which will come 40,000. Thereafter, you can see here the company has forfeited 50,000 rupees against the 10,000 shares. Proportionately, you have to calculate 50,000 divided by 10,000 multiply by 4,000. Nothing but it will come 20,000. Out of 20,000, we have given a discount of 4,000. So the amount transferred to capital reserve, that is share forfeiture account debited to capital reserve, that will come 4,000, 4,000. So this is a case of part B, case number 2 or part number 2, right? Now, next question. Now, question number 26. In question number 26, we are required to prepare revaluation account and partners capital account. So when we prepare revaluation account here, with respect to revaluation account, the limited adjustments are given here, right? So with respect to, we are solving the part A first, right? So Aryan, Adya, right? So in this is a case of admission where there was coming. So machinery account is increasing, appreciating, so by 60,000. Then creditors not likely to be rise. So creditors are also being credited to revaluation account. So creditors account debit to revaluation account. Now there is a provision we have to maintain by 4,500. Already we have the provision of 1,000. So to provision for doubtful debt, it is increased by 3,500. So we have the revaluation profit. The revaluation profit is coming 60,000. That is to be divided by old partners Aryan and Adya in their old PSR 3:1, 45,000 and 15,000. How I have calculated 60,000 multiply by 3 by 4 multiply by 1 by 4. So this is the revaluation account with respect to part A. Now I'm going to prepare the capital account of the partners. Now with respect to the capital account of the partners, We have to prepare the capital accounts, including the new partners here. It is a case of capital adjustment. Proportionate balance of proportionate amount is bringing in the form of capital. Aryan, Adya, and Dev. Particulars, particulars, capital account, Aryan, Adya, and Dev. Credit. First of all, balance BD of the partner's capital. So we are given balance BD 3,20,000 and 2,40,000. Thereafter, we have calculated the revaluation profit. Revaluation profit is coming. That is revaluation account 45,000 and 15,000. Then we are given the workman compensation reserve. Workman compensation reserve will be distributed among all partners, which will come 15,000 and 5,000. Thereafter, premium for goodwill. So premium for goodwill, Dev is bringing his share of goodwill, right? The goodwill of the firm is 2 lakh. Dev's share is 1 by 5th of 2 lakh. That is what 40,000. So 40,000 will be provided to the sacrificing partners. Question is simple. So it will be provided to Aryan and Adya in the old PSR, nothing but they are giving a sacrificing ratio. So 30,000 to Aryan, 10,000 to Adya because he's bringing his share of goodwill in cash, right? Now we are given the P&L loss also to P&L account. It is written off the partners, existing partners, 15,000 in their old PSR, 5,000. Now you need to calculate the capital of the Dave's capital on the basis of capital of other partners, right? So when you club the capital of the Aryan, so Aryan capital is coming 3,95,000 plus Adya's capital is coming 2,65,000. This is a combined capital of both, and you need to multiply by reciprocal of their share. The reciprocal of their share is 5 by 4 because their share is 4 by 5 as their share is 1 by 5 and their share is 1 by 5. Accordingly, you people need to calculate the capital, and this capital, the total capital is coming 6,60,000, right? 6,60,000 is the capital of the total firm, and 1 by 5 of that, which will come 1,65,000. So accordingly, Dev's capital they will bring by cash or by bank by cash account 1,65,000, and accordingly we will calculate by balance CD. Balance CD is coming 3,95,000, 2,65,000, and 1,65,000. Total is coming 4,10,000, 4,10,000, then 270 and 165, 270 and 165. So this is with respect to the capital, right? Now we are going to solve part B. In the part B, we are required to pass the necessary journal entry on Vinny's retirement. So I'm passing all the journal entries. First of all, we will distribute the journal reserve 50,000 among all partners in all PSR. So general reserve will be debited 50,000 to Ashish capital, to Vinny capital. Vinith is going to be retired to Rima's capital. So the old PSR is 2 is to 2 is to 1, 20, 20, 10. So this is the first entry with respect to general reserve. Now the stock is going to be reduced by 10,000. So we will be passing the next entry, revaluation account debit to stock account 10,000, 10,000. Then patents were undervalued by 20%. So their value will come, exact value will come 1 lakh. So patents are going to be increased by 20,000. So entry will be patents account debit to revaluation account 20,000, 20,000. Even students, you people will appreciate many times you have discussed this undervalued by, overvalued by, many times in the class. Now, entry number 3 in the same question. We have discussed the first 3 entry. Now we have calculated the profit or loss of the revaluation. Only these 2 adjustments are given. The profit is coming 10,000. So revaluation account debit. You can prepare the revaluation account in rough, which is coming 10,000. Only 2 adjustments are there. It is to be distributed among Ashish, Vineet, and Dev, sorry, Rima, in their old PSR 2 is to 2 is to 1, which is coming 4,000. 4,000 and 2,000. Now, after passing this, we have to pass the journal entry for goodwill. With respect to goodwill, the goodwill that we need to, goodwill of the firm is 60,000, right? 60,000, and the Vinny's share is 2 by 5 of 60,000, which is coming 24,000. And you can see here by calculation of gaining ratio, the gaining ratio is coming 1 is to 1. So 12,000 will be borne by Ashish, remaining 12,000 will be borne by Rima because the gaining ratio is 1 is to 1. So the for goodwill, Ashish capital account will be debited by 12,000. Rima's capital account will also be debited by 12,000, half of 24,000, 1 is to 1, to Vineet capital account. So this is a journal entry, adjustment entry with respect to providing Vineet's share of goodwill, right? Thereafter, we will prepare the Vineet's capital account in the working order of work, and we will calculate the final balance, which is going to be settled and transferred to his loan account, right? So that we need to transfer. So the total amount is coming 2,48,000, right? So students, we are making up the final amount which is due to Vinith is 2,48,000. Out of 2,48,000, we are making a payment of 20,000. So that means we are transferring 2,28,000 in the Vinith's loan account. So we have to pass the two journal entry. The first entry, Vinith capital account debit, Vinith capital account debit to cash account. That is 20,000, 20,000. And one more entry we require to pass, or either we can pass the compound entry, Vinith capital account debit to Vinith loan account. So that we require to pass the entry, the 2,28,000, 2,28,000, because the total amount was 2,48 and we have made a payment of 20,000 accordingly. Now part B, generally maximum students, they used to appear for part B, right? So we are discussing part B accordingly because none of the students, generally no students used to appear for computerized accounting. On that basis, we are solving part B. So 27 question, 27 part A, this question is having internal choice. The tool, the tool of analysis of financial statement, which indicate the trend direction of the financial position, operating result. Quite easy. Many times we have discussed theory is student friendly. So quite easy because they're talking about trend. So answer is quite easy. So the answer will be comparative statements. Now, ratios that because the comparative trend, they are so called trend analysis. Ratios that are calculated for measurement of efficiency of operation of the business, quite easy. That is turnover ratio, right? With respect to efficient utilization of resources. So final answer is option C. Now, the debt equity ratio of the firm, Manak Enterprises 2.5 is to 1. We need to calculate under which of the following transaction which result increase in the ratio. The answer is option C, quite easy because when you issue the debentures, numerator debt is going to be increased. Concludedly, ratio is going to be improvised. So that has been asked in the question. Now, question number 29. Which of the following are operating activities for the purpose of preparation of cash flow statement? So cash paid to suppliers, yes, it is operating activity. Then dividend received from investment, no, it is not operating. Cash received from royalty fees, commissions, yes, it is operating. So first and third are the correct. On the basis of that, option B will be the correct answer. This question is having internal choice. Now, with respect to part B, which of the following statement is incorrect? Payment of dividend interest will result cash outflow under financing. Yes, correct. So it is correct. Now, payment of employees benefit expenses will result cash outflow from operating. Correct. Receipt of interest dividend result cash inflow from financing. Right. So receipt of interest and dividend, it is not financing, it is investing. That's why this option C is wrong, and we need to find out the incorrect statement. That's why C will be the answer. But still, we are discussing about D also. Operating activities are principal revenue generation. Yes, it is correct. The final answer is option C. Now coming to next question number 30. Investing activities are acquisition and disposition of long-term assets, other investment not included. Very important, not included. It is correct in the cash equivalents. Correct. They're talking about other current investments other than marketable securities. Statement 2, cash payment to acquire the fixed assets, including intangible capital research and development result cash outflow from investing. Yes, you are making a payment, it is outflow of cash and investing. Both the statements are correct. That's why option A will be the correct answer. Now, next, classify the following items under the major heads So you need to identify the major heads and subheads. Computer software, they come under the non-current assets. Non-current assets, under non-current asset, it is properties, plant, equipment, and intangible assets. Then the answer is intangible asset. That is a subhead. So non-current assets, properties, plant, and equipments. Then further classification, intangible assets. Outstanding salary, it is current liabilities. Come under current liabilities. Under current liabilities, it is other current liabilities. Now, third part, work in progress, current assets, major head. Under current assets, it is showing under inventories. Subhead is inventories. Now, next question. Question number 32, we need to prepare the common size statement, right? With respect to common size, I'm preparing the common size quickly. You can see here, this is a previous year 2022-23. This is the current year 2023-2024. This is previous year 2022-23 in percentage. Because it is a common size statement, we will convert the whole absolute figures in percentage. It is also in percentage. First of all, particulars. We are given RFO, revenue from operation. That is previous year 20 lakhs. Current year is 40 lakhs. Add other incomes. There is no other incomes. You may leave here. Then total RFO, revenue from operation, which is coming as equal to RFO. Even you can directly write total RFO without adding revenue from operation, right? So this is 40 lakhs. Then you will deduct less total expenses, cost of material consumed. Nothing is given, you may leave this. Then purchase of stock in trade. So we are given purchase of stock in trade, that is this is 4 lakh and this is 8 lakh. Then other expenses, we are given 2 lakh and 4 lakh. Then we are getting profit before tax, PBT, which is coming 14 lakhs. So we will deduct this 4 lakhs, 2 lakhs here. It will come 14 lakhs and this will come 28 lakhs. Then we will deduct tax, which is given to you 50%, 7 lakh and 14 lakh. And profit after tax, I am writing here, that will come 7 lakh and that will come 40 lakh. So now you will divide all the values of each column by the RFO. So they will be converted into percentage. So this will come 100%, 100%, then 20%, then 10%, then 70%, then 35%, and then 35%. Occasionally, the same values are coming in the next case also. RFO again, here is 40 lakhs. Every item will be divided by 40 lakhs. It will come 20%, 8 lakh of 40 lakhs is 20%, 10%, then 70%, again 25%, 35%, and 35% profit after tax, right? Because you have paid the tax 50%. So accordingly, you will calculate 50% or 70%, 35%, 35%. So this is all about this case. So we have solved this question. Coming to next. So we are going to solve the 33 part A. Under 33 part A, first of all, we'll calculate the credit purchase. Credit purchase will come 12 lakh. Then we will calculate average trade payable. Average trade payable will come 3 lakh. Then you will calculate, since the closing trade payable are 2 times of opening trade payable. So accordingly, if you calculate there, so opening trade payable will come 2 lakh and closing trade payable will come 4 lakh, right? We are given the trade payable ratio, that is 4. So 4 is equal to 12 lakh upon average trade payable. So average trade payable is equal to 12 lakh upon 4, that is come 3 lakh. So you have to assume opening trade payable x, closing trade payable 2x, x plus 2x divided by 2, 3x by 2. Accordingly, you will calculate and you will solve this. So value of x will come 2 lakh. So that's the opening trade payable will be 2 lakh, closing trade payable will be 4 lakh. Now part B of this question. With respect to part B, if we solve this part B, so in the part B, we need to calculate the return on investment. You know the formula is PBIT upon capital employed into 100. So PBIT is coming to 4,80,000. How? 3 lakh is the profit after tax plus interest obligation. That is, we are given 10% of the debentures, 80,000. So PBIT is coming 4,80,000. and capital employed is nothing but debentures plus shareholders fund, 16 lakh plus 8 lakh, which will come 24 lakhs, multiply by 100. So return on investment is coming 20%. Next question. So in the 34A, we need to prepare the machine account first, right, in the form of a working note. So if you prepare the machine account as well as accumulated depreciation account, right? So in the machine account, the opening balance of the machine is given 3 lakh rupees. The closing balance of the machine is given 3,80,000 rupees. In the accumulated depreciation account, this is a machine account. I am writing the short form, right? So accumulated depreciation account opening balance is given 45,000. Closing balance is given 62,000. So you have sold the machine whose accumulated depreciation is 20,000. So balancing figure of the depreciation is coming 37,000. However, this 37,000 is having no use because we need to calculate cash flow from investing activity. That can be done only preparation of machine account. So accumulated depreciation account preparation is optional, right? So with respect to machine account, you have sold the machine at 20,000, 10% profit. So accumulated depreciation is 20 and including profit, this is coming 33,000. So because the book value is 30,000, 10% of 30,000 is 3,000, so it is 33. And the purchase, this is a profit of 3,000. Accordingly, you calculate here the balancing figure will come 1,30,000, right? So 1,30,000 will be the balancing figure. So this is a purchase of machinery and sale of machinery is 33,000. So when we prepare cash flow from investing activity, right? So with respect to cash flow from investing activity, the inflow of cash will be 33,000. That is sale of machine, sale of machine, and purchase of machine will be outflow of cash, which is 1,30,000. So this will come 97,000. This is net cash used under investing activity. Net cash use under investing activities. That is coming 97,000. This is outflow used. Now with respect to part B. With respect to part B, we are issuing the shares because we need to calculate cash flow from financing, issue of shares. The shares have been issued at premium because premium is also increasing. So 8 lakh minus 12 lakh for shares are increasing by 4 lakh, 12 lakh minus 8 lakh. So plus premium. So issue of shares, the inflow of cash is 4 lakh 40, 4 lakh plus 40,000. Then the company has made a redemption of debentures. Debentures are reducing by 1 lakh. So redemption of debenture, there is no discussion about there is no information about the premium redemption. So they have been redeemed at par. So 1 lakh rupees, they are going to be reduced. You can see here last year it was 4 lakh. In this year it is 3 lakh. Then you have also made a payment of interest, which is directly given 40,000. So 4 lakh 40 minus 1 lakh minus 40,000. So this is coming 3 lakh. So 3 lakh is a positive figure. So accordingly, this is net cash inflow under financing activity. So this is all about this paper, part one, and many questions are same in part two as well as part three. I hope you people have understood. You people can analyze which question you have done correctly and in which you people may have committed error, right? So thank you everyone. Thank you very much. Take care. Bye bye.